Afternoon, everybody. Good afternoon, John Walker. Good afternoon, Jared Antin. All right, all right. I love it, baby. This is going to be a good one, guys. We're going to get right into this. I don't want to waste time. I want to go right into it. Jared, I want to give you the floor as soon as possible. But let me just tell everyone, Jared is the managing director here at Elegran Forbes Global Properties. In addition to leading Elegran, he is a very sharp mind when it comes to what is happening in the crazy world of Manhattan real estate, New York City real estate, and other real estate related matters. And Jared, you were recently quoted in a Forbes article that talked about the next act for Manhattan real estate and how that is stability. And in a world of volatility, in a world of noise, it's stability in and of itself. That is the real story. So I would like you to go into what you mean by this.
It's starting to sound like a movie premiere. In a world of stability, in a world of volatility,
in a galaxy far,
emerges
far,
a new
far
hero.
It is a movie. That's what this is. So Jared, you're the director. Tell us what's going on. Tell us what this movie's all about.
Thanks, Noah. Thanks, Sean. Appreciate to be here with you guys. You guys have been obviously a shining light in a sea of chaos and a great partner. So happy to sort of walk us through what's going on. You know, real estate in New York City is coming up as a new superhero. I think to get to the main point of what we want to talk about today, we have to take a trip around the country. So we're going to take the long way to get there because context is everything. And you know, the key about New York City is it moves asymmetrically and countercyclically to what the national market does. And generally speaking, what's going to be bad for the rest of the country could actually be good for New York. So headline, no one's hoping for a recession, but a mild recession could actually benefit our market and our transaction volumes. So I think an important thing to look at is what has happened with prices over the last year or so nationally. And there's a really good image, which Noah can throw up in a second here, that looks at what happened with prices in 2024. And what's really interesting is how much of a shift has happened. Markets that were super hot in the early days of the pandemic are now cooling. Draw your attention to Central Texas, South Florida, parts of, outside of Denver and Colorado. Secondary and tertiary markets that were really hot when people were changing their habits during the early days of the pandemic are now cooling. Austin is a perfect example that saw an incredible boom back in 2020, 2021, and even into 2022. It saw 20 or 25% appreciation within a year because you had a ton of population migration driven by the fact that tech companies were moving their companies or building offices in Austin, Tesla, Facebook, all of the major ones, Google, and it brought a ton of people in without a commensurate increase in housing supply. Fast forward to now, those markets are suffering. They're inventory rich and buyer poor. Miami too. People decamped to Florida because of lower taxes. You know, this started after the SALT in 2016, but now with rising, assessments and insurance costs, Miami and Florida in general may not be all it's cracked up to be from a price perspective. You know, looking ahead to what Zillow expects for 25 and 26, the markets that were slower or lagging behind the early days of the pandemic are now the hotspots. California, hot again. Northeast, incredibly hot. South Florida, Texas, other sort of secondary markets, when you look into Colorado and up through Boise, for instance, are starting to cool. So this is an interesting thing to see how there's a trend emerging. And you're moving from these markets that were super hot at that time that were inventory constrained and demand rich that are now seeing themselves as inventory rich and demand constrained. If you look around Metro New York, so keep New York City for a second out of it, but look at the suburbs, they remain incredibly demand prone and still inventory constrained. And you're seeing prices go up incredibly when you look at Connecticut, the New York suburbs, Long Island, and the New Jersey suburbs as well. Some of the hottest housing markets in the country are actually in the New York Rust Belt, Buffalo, Syracuse, Rochester. Why? A, there's an affordability piece. B, Micron is supposedly building a giant chip factory outside of Syracuse, and there's all this related, movability and pressure and residual sort of industry shift that's going to happen there. But the bottom line that brings us back to New York City is the market now is understanding that we're not waiting for rates to change. For so long, over the last 5 years, rates were either a push or a pull. Early days of the pandemic, they were a pull. Rates were super cheap. Money was affordable. People had a need to move. Starting about 3 years ago, when rates started drastically rising, spring 2022, they became a push. Higher interest rates went up quicker, faster, steeper than we've ever seen before. And it gave people just a not so momentary pause in the market where they wanted to see what was going to happen. Fast forward now, people can't wait anymore. So what's happening is life events now are dictating transactions. And this means the transactions will fundamentally happen at a normal or average level of volume. And that's really important because for us as real estate professionals or the consumer, we have to transact in the market that we have today. So the headline right here is the market is fundamentally normal. And actually in April, if you look at the contract volume, Urban-Digs is a great thing here, as well as we're going to see it with the Elegran Forbes Global Properties Manhattan Consumer Sentiment Index. We're back to a normal level of contract volume. April's print in terms of contracts signed in Manhattan was the first month in a long time where it came in essentially at the average. We were in such a low in terms of contract volume for the last 2.5 years of lagging behind. Here's our indicator that basically measures every week the amount of contracts against a pre-pandemic seasonally adjusted average. Where it's above the line, it's above average. Where it's below. But we're getting back to this normal piece where the line is every week is basically closely mirroring that pre-pandemic average. So what does this mean for us as real estate agents? This is where it's really important that we're stepping up our game. In the times when deals were plentiful, it covered up bad habits. It enabled you to do deals without doing your best. In times of famine, you had to hang on to every client tooth and nail and fight for everything. Now that we're getting back towards a healthy level of transaction volume, business is going to be won or lost in the middle. So very simply, you have to be able to manage the middle of your funnel if you want to be able to close business. Because if you're not managing the middle of your funnel, I can guarantee you someone else listening to this webinar is. So how do we do that? We do it through a number of different ways, but one easy way is to be smarter, more informed, and more prepared than the next guy. Information is free in many cases. You just need to be able to go and spend the time to find it. Urban-Digs and Noah and John are going to show us some stuff as we go through this webinar today about how we can utilize Urban-Digs to be smarter and more informed. It's really easy for me to stand here and talk about what's happening with the city on a large scale thing and headline numbers. But the reality is the city is a sea of thousands of different micro markets as you slice and dice based on building, block, views, renovation quality, price, location, you name it. Every single market has a unique pulse right now. And we need to be able to understand based upon the seller or the buyer that you're working with, where are they, what do they need, and how do we meet them where they are? So let's come back. For the first time right now in 8 years, Manhattan is starting to break out of its price ceiling. If we look at the price per square foot on the condo side, we're starting to finally break out to the upside. And tying this back to the pricing conversation that we spoke about a few minutes ago, this is really important because New York City has lagged behind the national average by a huge amount. One of the insights reports that I put out in the fall basically tracked just this. And nationally, since Manhattan hit our last peak, national average went up by 74%. New York City is up about 2 or 3% since our previous peak in 2016. So we have seen fundamentally virtually no appreciation in our market. We've been hit by taxation and legislation and fuel, changes in the part of the last decade. We were starting to see right at the start of 2019 some ability of rebound, and we got smacked down by COVID again. And we've been fighting out of that COVID slump now. And for the first time, we are finally breaking out of this. And that is something that is so, so, so important.
Hey, Jared.
Yes, sir.
Yeah, I just want to. Sorry to interrupt you. You're on a roll over here. I think you can. I think you can see my screen. Hopefully, if I'm presenting this properly, yep. And I believe this is the print you're talking about right here, right? With March and April preliminary data that's coming in. It's kind of incomplete if you see it on our chart here, but it's starting to come in at record levels, and it also kind of shows how we didn't do nothing for like the last decade or so, while the national housing market's probably up 100% over the last decade. So what I think is just something very, very interesting to point out, okay, just really quick, this data, right? That data, that is, if we do a timeline right now and we take this data right over here, closed sales, which represents probably January or February deal activity, right? And if we just think back to what we just went through, I'm going to go to liquidity pace chart over here really quick and take a look at this chart. On this chart right here, let me take that out. We're looking at this period. So that strong sales data represents this period of time. We're yet to see this whole move right here funnel through the sales pipeline. And we're certainly yet to see a deal that happened this morning or a deal that happened yesterday that I guess would give us price discovery of the tariff uncertainty, potential slight hiccup that we're going through now. Is that correct?
100%. And this is why it's so important for us as agents right now to be able to rebuild consumer confidence through the data. So everything that we're showing on the screen right now is not going to be reported in the media for another 6 months. So It won't be reported until September or October. The prices are going up. If you play forward what Noah just said, that means there's 2 to 3 more months of data in a more liquid market that's going to show a continued uptick in prices. So the general public is always 6 months behind what is going on in the actual market. That means when they first hear the prices are going up, it's too late. And buyers today, right now, are not driven by external pressure or by FOMO. We haven't had, and this is so crazy to think, in 12 years, going back to really 2013, 2014, a truly externally motivated FOMO-driven market. There was a little bit of it when interest rates started rising 4 or 5 years ago after they were super low, but we haven't had a major like FOMO prices are going up market in a really, really long time. Today, right now, buyers are driven based upon life needs. They're not being pulled or pushed based upon interest rates. Our current expectations, and the Fed reconfirmed it in their meeting notes from yesterday, that they're going to sit tight for longer. That means there's no real movement in interest rates, and buyers are going to transact based upon their life needs: babies, births, death, divorce, job relocations, just them moving out of their properties. So rents too, as Noah's pulling up here.
Look at what's going on with rents, Jared. Is this the start of it?
So rents rising. This is where we're seeing this sort of unsustainable price growth. This almost reflects the Austin real estate price growth market, leading into 2022. And the question is, who can continually afford these rents? What's going to happen if the Fair Act goes into effect? You can expect, in my professional opinion, rents to go up by another 5 to 10% just to absorb the broker fee shift. But rents are up 10%, 9.6% in the last year. And it's astronomical. We're not building enough supply. And then if we layer in what could happen in a mild recession, why I say a mild recession could be good for New York, first and foremost, employers generally have been desperate or really motivated to get employees back to the office. But the labor market has been still very, very strong, and it has allowed the employees to contain or to continue to have some power there. But if the labor market weakens, it can shift some of that power back to the employer. And again, there still remains to be a ton of employers located in New York City. Bringing more people back to New York is going to certainly benefit the rent market, but truthfully, it can't really sustain much more demand. And it could also have a flow over effect into sales. And it could be the push that the Fed needs to actually drop interest rates in order to restart growth. And I do believe that dropping of interest rates is going to be able to be that thing that helps make people move. Some people are still stuck on the mentality of them having a sub-3, sub-4% interest rate, and feeling the proverbial lock-in effect.
Yeah. Jared, I want to go back to something you mentioned earlier, and you were talking about why it's very important to sort of focus on the middle of your funnel. And I wonder, just for the sake of the audience and for my own sake, since I'm sort of new to marketing and all that stuff too, could you just describe from your point of view, what is the funnel? What makes the top of the funnel? What is the middle of the funnel? And how does that all sort of fit into the sales process from the agent's point of view?
Great question. So I define the top of the funnel as anything from you're trying to generate marketing, you're trying to get people to inquire. So it's anywhere from your marketing efforts through an initial inquiry down to when you meet them in person for that first showing. So it's all that work that gets you to meet in person, get that nice buyer representation agreement signed, or meet them to do a listing pitch. To me, the middle of the funnel is everything that happens between that first showing and getting them to say, I want to submit an offer. So it's the meat. The bottom of the funnel, I would consider everything that happens from submitting that offer all the way through closing. And then, of course, you have your natural just post-close and relationship management. But that middle is so important because the sales process is elongating as people, again, are buying based upon their life needs. So for us, it's coming back to this basically this consulting type sales approach where we need to understand what is motivating our clients to want to transact. Why did they raise their hand and said, hey, I want to go look at this property, or hey, I need to sell this property? We need to understand, what are they looking for? Why do they want it? What are their conditions of satisfaction? And then we need to pin everything that we do with them back to that. How are we helping to achieve this goal? How does this property meet their needs? Why is it priced right? Because buyers today are painfully patient, incredibly discerning, and scared of overpaying. That is an incredibly difficult set of ingredients to be a real estate agent. This is also a market where it requires us to be good old-fashioned brokers. Neither party, neither the seller nor the buyer, necessarily have any advantage. It is an equilibrium-driven market, and this requires relationship-based selling. It requires relationship-based selling with your client because you can use the best technology, the best tools. At the end of the day, the client wants to work with someone that they trust, they like, and doesn't drive them crazy. Bonus if you could be a good therapist.
Yeah. That last part's probably a little hard these days.
It's very hard. So you need to be smart, but you also need to be able to be compassionate and have empathy. And more importantly, you need to play very nicely with the broker on the other side. One of my pet peeves, when another agent that I'm doing a deal with views me as their adversary. Fundamentally, a buyer and a seller's agent are not adversaries. Yes, they're representing, opposite parties, but they all have the same goal, that they want to bring forward a meeting of the minds. And you have to believe that if you're representing a buyer and you want that seller's agent to convince the seller that your client has the best offer and that you as their agent would be most reliable to bring the deal to fruition, you can't be a dick. You got to show up nicely. You got to play nicely in the sandbox, as I like to say. This is still very much a relationship business, and doing so with your clients, from my perspective, what's most important right now is how are we providing them good content and personalization at scale. AI and all these technology tools are not going to replace the individual, but the individual that's not leveraging these tools smartly will be replaced by someone that is.
Yeah. Jared, let me ask you a question. A lot of the times the realistic scenario is a lead comes in, they're active for a while, you feel like you got something going on, and then they just go quiet. They just go radio silent. What do you do to re-engage 30 days, 60 days, 90 days later, someone that you thought would have made the decision and again, just is fading off? And I bet you a lot of agents think they can think of hundreds of these cases over years and years. What do you do about that?
There's not a one-size-fits-all approach. The answer that many of you may say is a cop-out answer, or you're going to roll your eyes because you're like, that's really difficult to do, is you need to make sure that you have the right engagement strategies set up from the beginning so they can't ever slip away. Now, I know that that's easier said than done, and there's no one that is going to have 100% capture rate, and that's just reality. But what you can do is make it very difficult for them to be able to want to go elsewhere. And how do you do that? You understand their needs, you're providing them the right communication, the right value, and you're communicating with them in the manner and way that you like. Now, there's all sorts of different reasons why clients will not respond. Sometimes their needs just have totally changed. Maybe something happens where they can no longer buy. And we all know that it's a lot easier just to ignore someone or ghost someone than it is to have that hard conversation. So some of this is just human nature, where it may not have been anything that agent did or didn't do. The person's needs just changed, or they're no longer able to feasibly purchase. And the easier thing is just not saying anything. Or they may just not reach out until they have that need. But being able to continually drip them information. I have a bunch of, examples over my, tenure in the business where clients that I thought were just totally gone showed up one day because they got my consistent outreach, my newsletter, my market updates, my videos. And, one day it just clicked. So that's the biggest piece, is that we live in this sort of like instant gratification world. And the reality is this is not a sprint. This business is a marathon. And you have to just keep doing and doing and doing, even if you're not getting that immediate feedback, because It's only after a couple of years and repetition that you truly start seeing the fruits of the labor.
Yeah, and that's we all expect instant gratification, right? I mean, we react best to that, and that's not what this business is.
If you want that, go sell timeshares.
Well, it's interesting. It's a lot of the plus change, right? The more things change, the more they stay the same. I mean, you could look back at this business 30 years ago, it was the same, except instead of, content on YouTube or Instagram, it's postcards, it's mailers, it's things like that people are putting on their fridge. I mean, I remember, going into apartments when Noah and I were transacting, we'd represent buyers, we'd go on open houses and we'd see, brokers put it on the fridge, like their little parking calendar or, the holidays or, all that kind of stuff. So it really is a lot of the same stuff. And the question I have though, Jared, is, and I think you kind of mentioned this, is, and I guess it would be really difficult if you're an agent and you have ideas for the top of the funnel to kind of bring people in, you want to work them to the bottom, you want to get them to that middle part. How do you know, and how do you patch a leaky funnel, especially at that top end?
You need the right systems, the right tools, and the right resources. And that's a mouthful, right? So, what we do at Elegran, and I don't want to make this about Elegran, but, we have a full support team and a full technology package that gives, plug and play pieces. So wherever you are, whatever brokerage you are, whatever systems you're working with, you need to make sure that you have solutions for each segments of the funnel, right? For me, the whole middle is about nurturing, education, and follow-up. And AI has, created an incredible advantage in being able to do this, but you have to do it in a way that doesn't make it, inhuman. And I was at a real estate conference with some brokerage leaders last month, and the thing that I came back standing out most is technology is no longer considered the answer to everything. Technology is considered a way to help us be more human and more available to our clients. And that's an important distinction, is we're not trying to be replaced by AI. We're trying to be made better, or so that we can delegate and elevate and be more available in the ways and places that we need to be with our clients.
Yeah.
So, yeah.
Well, I was going to say, so, I mean, we're obviously big fans of that. Like, we like to say that AI stands for agent intelligence. And I really take your point. So especially in that middle section, and I guess, what I really want to dig into here is especially, getting that person to, they've raised their hand. I'm just focused on the buy side for a second. They're interested in buying a place. Do you still classify, with all of this, is there still like an A buyer, B buyer, C buyer kind of thing? Are you still prioritizing and focusing? Because your attention is a limited asset. So I'm wondering, if you have these people in the funnel and you want to stop them from leaking out, how do you figure out who to prioritize, et cetera?
Yeah. So my personal approach is I look at it based upon urgency to transact. So, who needs to be able to sign a contract in the next month or two, right? Who's 2 to 3 months? And I basically set it up from that way, because you have to be able to focus your time and effort. It's not limitless. 2 is also the use of these buyer representation agreements now help you be able to front load buy-in from the consumer, right? I know many agents that would go nearly the entire transaction without ever making it clear who they are or what their role is, or asking for any sort of exclusivity. My personal approach that I like to do is upfront. I want to get the client's buy-in, or at least understand, to be incredibly transparent about, do they want to work with me exclusively? Are they seeing other people? That's okay. But at least there's a two-way street so that I can throttle my effort into them and it's according. And that's probably the biggest thing, is that you need to make sure that your efforts are matched by what a client wants and and what their expectation is. And don't be afraid of having that conversation full on right up front, or as you start building that relationship. To me, being on the same page, having that open, honest dialogue will save me a ton of time, create actually a relationship building conversation. So many times agents are scared of that conversation, and it boggles my mind. Like, if agents can't stand in front of the mirror and communicate their value add, this is not the business for you. And if you can't sit in front of a prospective client and have that conversation about how I can effectively run a business and service my clients if my clients aren't committed to me, it's crazy to me, right? So being able to actually have that conversation, what I have seen and the way that I've trained the agents here at Elegran and what they've seen is that has actually created a better engagement from the client, because they're like, holy cow, no one else has had this conversation. That makes perfect sense. Let's do it. And then that lets you be able to understand and set up a true game plan. And that, again, comes back to this transparency. It's great. So your goal is to be settled in your new home by September because kids are going to school. That means, again, let's back it up. You're buying a co-op. You got to finance. Like, ding, ding, ding. We need offers in a contract signed in 2 weeks. Like, holy crap, let's go. Or maybe that's not possible. Let's look to rent. You're in trouble there too. But let's look to rent for, a couple months and buy us some more time. So having that transparency and that thoughtfulness in how you're going to set up the process is really important.
This is really interesting, John. I'm going to Jared. I'm going to present because I want to draw out what's going. I'm trying to take notes, and it's hard to. I need to see it. So I took the liberty of drawing a little funnel. You see that, Jared?
I do.
Okay. So we got the top of the funnel, we got the middle of the funnel, we got the bottom of the funnel. Okay. Could you just summarize so that everything that you just said? What I know you said the middle of the funnel was nurturing and something. I missed the other two terms that you used for the middle of the funnel.
So the middle of the funnel is nurturing, educating, and following up.
Educating, following up. All right. Pardon my typos here, guys, but you can see what I'm doing. What is the top of the funnel?
The top of the funnel is marketing.
Okay.
Marketing / outreach.
Okay. Content.
Right.
And when you talk about the top of the funnel, I just want to, these are all your leads, guys. So like social media, events, personal meetings, mailings that you do, building farmings that you do, advertisements you put out. Think about all those different things that you do. You're trying to get it into the funnel.
Yeah.
Right. And then once you get them into the funnel, you start this nurturing, educating, and follow-up procedure using your local CRM or CRM solution that's provided by your company. Right.
The important thing on the top, though, is it's also alignment. So everything I just described around having that buyer broker meeting or a seller consultation is aligning your goals and the client's goals and understanding, are you the right match based upon your experience, your bandwidth, your personality to navigate that client to their goal. And that's one of the most important things, because you as an agent shouldn't take every client, just like every client's not right for you.
Interesting. Okay, good. Okay, so now tell me what the bottom of the funnel is.
That's where the sauce is made. No, that is the result of you doing your job, right? So great openers will be able to start relationships on the top. Great closers will be able to instill the confidence, excitement, and motivation. But the middle is where you're going to drive the revenue. So you could be the best opener or the best closer, but unless you've been able to nurture them through the middle, you won't have enough people in the bottom of the funnel to start doing the offers, to do the analysis, to be able to instill confidence, to negotiate, right? This is where your skill set from being a negotiator, a data analysis comes in, and being able to be that quarterback to usher in the rest of the transaction once you have an accepted offer.
I got it.
I have a question. This is super interesting. So when you look at the funnel, right, you have the top of the funnel, the middle of the funnel, the bottom of the funnel. And as you said, once they come out to the bottom, the end, hopefully for you, is a commission check and a job well done. What's that?
And referrals.
And a referral, right? Exactly. That's
advocacy.
What you want.
Yep.
That's right. So, but the question I have is, should you have a timeline in mind, or rather, is there a standard timeline you should sort of aim for, or is that dependent upon what the market is? I'm just wondering, how you should sort of, understand, like, forward thinking in terms of, trying to plan out your own financial life. All right, well, I've got X many people in the funnel. Hopefully I can close these. It'll take X months kind of thing. Or is every single person just so idiosyncratic that you just can't plan it? So
I think part of the issue is a lot of times agents overlay their own fears, pressures, and motivations onto the sale. And that's what pushes people away, because it is, as much as an agent thinks they might be able to hide that, it is so transparent. The right way to do is to understand what are the timeframes, the needs, and the motivations for each of your clients. If you've organized that, if you've had those conversations, you would be able to aggregate that or report on it in your CRM that can then go into your business planning, because you'll know, hey, I have X amount of clients that have, a desire to close in this period or that period or that period. So, yes, business planning is important. Yes, being able to understand where your clients fit in on sort of the Gantt chart is important, but there's no sort of standard. We get clients, that show up and say, hey, I need to buy tomorrow. Here's my, suitcase full of money. Or, hey, I'm just starting to think about it and I'm a year or two down the road and anywhere in between.
Jared, when you're in the nurturing middle of the funnel, how often are you supposed to reach out to these guys?
There's not a one size fits all. I sort of look at it as a mix between active and passive engagement. Active would be me picking up the phone, sending them a text or a manual email, and passive for them getting some piece of communication from me. Being able to connect also on social media with your clients is a great way to stay top of mind in a purely passive way that also keeps you relevant. So if someone is 6 months or more out, to me, generally it's about once a month to have some sort of passive piece of communication. But at least once a quarter, my rule of thumb is to touch everyone in my database in some active way, which helps me re-index where are they and did something change. So someone could be 12 months out and I have a monthly cadence, but at least once a quarter, I want to be able to actively discuss them. And you can build this in a passive way too, but like, has something changed? You had previously said your time frame is X. Is it still that? Did something change? I also sort of love the good, follow up, like, here's this text, like, let me know which applies, A, B, and C. And you do it in a way that is sort of personal, but it's also super easy for them to respond. And then you could re-index and re-update any of your automation based upon those responses.
Yeah, that removes kind of the negative emotions from it, doing it that way. It makes it a little easier to answer in a more comfortable
and even
setting.
adding some like self-defeating humor, like, you didn't like me, right? Like in it, like option A, B, C, or like D, like, sorry, dude, I didn't like you. I don't want to work with you. And like, sure. Yeah.
How often does that get checked?
I know. Hopefully never. But you're a nice guy, Jared. I would never say D.
He's okay.
Unless, I mean, for Noah, it's like I can't hit enough.
You can't hit it quick enough.
Mm-hmm.
That's right. Well, so one of the things you mentioned is having that upfront conversation about, hey, listen, I'd like to work with you. Are you interested in working with me exclusively, et cetera? And now you mentioned about talking about just the touch base. What's the divide between personal, physical, pick up the phone, meet up for a cup of coffee versus digital connection? Is there a hard and fast rule for when you want to do this in person versus when is it okay to do via text or email or whatnot?
So again, none of this is hard and fast. Everyone's going to have their own sort of personal belief based upon just their own strengths and their workload. To me, text has become a way more accepted business means of communication in the last 5, 6, 7 years. So it's also a sense of urgency. Like, I don't know, how many unread emails do you have? Everyone do this exercise. How many unread emails do you have right now? And then tell me how many unread text messages you have, right? You very rarely leave a text message unread. It's just deemed as something that's more urgent, and it's almost more rude not to respond to a text. So because of that, I've been favoring text a bit more in terms of trying to get some sort of process or time frame update. I've been using email as sort of that longer form, just general communication and touch base. But if I want to be an active, like, hey, what's going on, and re-index, I would use a one-to-one text over a one-to-one email. To me, anyone that I'm actively working with, it's good to be able to meet with them or at least offer to meet with them in person once a quarter. Anyone that I closed, I would love to try to meet with them ideally once every 6 months, but I know that can get incredibly unrealistic. So then I try for it to be, once a year or something like that, just to be able to stay top of mind, even if you don't end up meeting with them because they're not here anymore or whatnot. The thought of reaching out is really the most important thing.
It's crazy because, this is this job of being a New York City real estate agent. It's there's so many elements to this job that make it complex, and you got to wear so many hats. And if you just divide your day by time, right? I got to spend an hour on this, an hour on that. It's like you got to spend an hour on, either nurturing or getting fresh leads into the top of the funnel, the middle of the funnel, or the top of the funnel. So I'm wondering, Jared, how do you see top producers structuring their week to focus on nurturing versus new?
But it's a great question. It's really an important thing because real estate agents by nature generally tend to be reactive in nature. So lead comes in, client calls, hey, I want to go see 123 Main Street. Great, we're off to the races. And we don't spend the time, because as a creature, we're not necessarily the most organized or diligent as salespeople, right? Like, we are not the best planners because we're trying to provide the best customer service for our agents as possible. So sometimes we go soda-straw without understanding. So the biggest thing that teams or top producers need to do is make sure that they have the right support resources around them and that they're building a team. One of the biggest issues I see is agents not investing in an admin, in an assistant, in a team member until it's too late. They think they can do it all. They're not willing to make that investment. And like anything else, you almost have to take one step back to take two forward. You have to take a little bit of a revenue hit in order to invest and build, because if you don't, you're going to drown. And if you don't do it, you're not going to be able to provide enough service to the clients. You're going to certainly have a bigger leak in your funnel, and you're not going to be able to get as many people into it. So being structured and being thoughtful and forward looking. Again, this is part of what we do. We have a whole Elegran experience at Elegran that takes our agents through 6 stages, has certain different services and support resources to help them move through. You need to make sure that you're having intentionality around everything you do. Time blocking, I'm a big proponent of. I always start my next day the night before, looking ahead. What do I have to do? Am I casting out any emails that night, trying to lay the hooks for the next morning? So being able to be prepared and forward looking and being proactive is going to be one of the most important things that'll differentiate someone that can make a good living in this business and someone that's truly, kicking butt.
Is it usually? I'm sorry, John. One quick question. I'm sorry. Please don't forget. Is it usually a non-agent that's doing these? Is the who that does these nurturing and the resources that you're talking about? Is that usually a non-agent, or is it usually a team agent kind of thing?
Any and all. I mean, we've seen it be done successfully with virtual assistants. We've seen it done with non-licensed assistants. We've seen it done, with the agents themselves or with some junior agents on the team.
Okay.
Well, I was going to say, no, it's really interesting. And apologies to any hippies or communists in the audience, but this really is capitalism 101. You have to basically invest in this and you're building a process. And one of the amazing things I've noticed in this industry is, and to Noah's point, the people who are in this and who have made a career out of it, and I'm not even talking like the best, but just the people who can, afford a lifestyle that real estate that creates. So you basically have to do enough deals to kind of keep yourself in it. They're hard workers. Yeah. And there's a lot of stuff. They are wearing a lot of hats. But the people who are really successful, the people who've made that transition, have taken that hard work. It's the same amount of work, and they've just focused it on building that process. And to your point, Jared, they take a revenue hit because they take some money away from their bank account and they put it into a process. They invest that capital and it yields dividends. And it's really amazing to watch it work, especially with some of the top teams out there. They really are building machines. It's not necessarily one guy out there or one woman out there, doing deals. It's a team. And, someone shakes hands, someone shows open houses, someone prepares the reports, and that whole process. And that's just the physical side. And there's a whole bunch of, the CRM side, the technological side behind it. It really does take a ton of work, but it does take you have to focus on it. So you have to have someone help you on the other side so you can focus on that. It's a really tremendous point, and I don't think it's made often enough. So thank you for bringing that up.
Yeah, and John, we just interviewed Lindsay Barton Barrett of Elegran. That podcast is coming out probably next week, and she talked about how she was a single agent and that it was a fourth marriage. Her sales manager came and said, "You're working with this person over here." She's like, "No, I am absolutely not." I didn't want. She's very hesitant, right. And now that
it's like a buddy cop movie.
When she reflects back, she's like, that was the greatest moment. The fact that I brought in somebody else that allowed me to actually grow my business and be more of a face of this business. I needed more who's to grow this business. And I didn't see it. I was doing everything myself. I thought I could always do it my way, but that's not scalable. If it's just you doing it for everything, that's not scalable to the next level. You need that team.
So in our experience journey, we have this invisible line where, when you're first starting out, you're working for your business and you're putting in so much effort and you're not getting out a commensurate return. And at some point you cross this invisible line where your business starts paying dividends to you and it starts working for you. And this is where you start becoming what we call an originator. So you move from a doer, who is the person that can go and take a client and close a deal, to an originator where you have the relationships. Clients are coming to you, and then you've surrounded yourself by a trusted team of people who can provide a similar level of service as you can. And being able to get across that threshold is so important. And the number one mindset piece that I always ask when we're interviewing agents is, do you see yourself as a salesperson or a business owner? If they see themselves as a salesperson, they're not going to be long in this business. If you see yourself as a business owner, then they're going to have the right mindset that they're going to invest, John, to your point, in those people, in those processes, in those protocols, and they're building for a long term with intentionality.
Yeah. But I mean, it really is hard because a lot of people come into this seeing themselves as an entrepreneur, right? It's a very entrepreneurial business, seeing themselves as this owner and making that conversion from ownership or trying to run it to actually being the owner. And I guess the question I would have is, Jared, I mean, you've especially in your seat, you probably have seen agents who come through who are very, very active, but have trouble converting. And I'm curious, what's your advice for an agent who's very active, but just not converting?
Converting into deals or able to truly level up their team from a management competency?
You know what? I'm going to go with
Let's do both.
I think let's do both. Twofer.
A and B.
So
you don't cost anything, Jared. You're here for free.
Yeah. This is why I press D when Noah texts me.
Thanks a lot, John.
Converting deals, to me, it goes back to that they set the wrong or didn't set any expectations with the clients. And this is why, people waste so much time and get so, hurt by the fact that, like, I invested all these hours and the clients didn't respond. But did you invest the right hours in the right way with the people that actually want to work with you? And this is where I think the biggest mistakes get made, is that you don't have the hard question up front. If you have the hard question up front, your capacity will increase. You'll be selective in who you work with. And the people that are left are going to close at a significantly higher rate. And people are so scared, this is human nature, of rejection, that they just want to go and meet them. And they just think that first property people are going to buy. And if this was 2021, maybe that strategy would work because people are needing to be pressured. There's a lot of things out there, but that's not the market we're in, right? The headline right now is the market is normal. Your process has to be exceptional. So what are you doing to be able to make sure that your process is set up as good as it can be? The easiest thing is to take ownership and have the client take ownership in that first conversation of what they want. I want a 2-bedroom on the Upper West Side that is turnkey for no more than $3 million between these blocks and these blocks, and I want to be moved in by Labor Day.
That's great, because then they're going to buy in Midtown South in a condo.
Correct. But you're at least along for that journey. So now as you start showing them things, you pin everything back and they're like, well, I actually need this, or, well, I can't go that high, or, well, I need this. And then you start pivoting, but you pin back now and say, okay, so are we in agreement that we're doing this now? Yes. Okay. And you move with them, because I get this question all the time. Like, holy cow, I haven't heard from this buyer. Now I find out they bought in Tribeca. They told me the Upper East Side. What the heck happened? You never had the transparent, honest conversation where they felt comfortable bringing you along for the journey. So to close, and to close well, that's the most important thing. Have those difficult conversations, have those active check-ins, and make sure that they're taking ownership, and give them the comfortability to pivot with you. And pivot.
Is it as simple as just being confident and not fearful of just saying, like, what do you want here? Like, talk to me.
Bingo.
Like, what's?
Yeah. I mean, at the end of the day, a lot of clients don't know what they're doing, what they want, or how to go. Now, their natural defense is to say, I bought 3 properties. I don't need a broker. But they do, or at least they need a confident broker that can match their energy, because this is the most stressful thing. I bought my house for sale by owner off the market. I represented myself. I can coach this all day long. I screwed up that deal 3 times. I needed Michael Rossi, my boss, to come in and rescue that deal. Everything I would have told myself not to do, I friggin' did. Why? I was under pressure. I wanted it. I also didn't want to overpay. I had my wife. So again, you need someone, the best of the best needs someone to help create mental sanity during times of stress, and moving is certainly very stressful.
Yeah, I sold my own place. I screwed that up.
Mm-hmm.
Oh my God. I feel like I'm next. It's not going to happen to me. But I'll tell you this, I just want to, let me just follow up this point before you get into the whole, going into the business owner thing. To just a flashback, many years ago when Noah and I were transacting, we had a lot of buyers. And we noticed this thing. People would say they're interested in Tribeca or Soho, and you would just go through and you'd send them listings. Hey, what do you think about this? What do you think about this? And they'd get back to you. They'd go through, and then it just got quiet.
Right.
And then nothing would happen. And the next thing you know, they're like, I ended up buying a place on the Upper East Side. It's just like, at least from my perspective, I didn't understand when that shift occurred or where that shift occurred, because I sort of, kind of gave them the independence to sort of do this on their own. And I didn't necessarily put myself out there to say, hey, it seems like you're pretty quiet. Have your search interest changed? Is everything okay? And I just sort of like, that's how people are. That's how I was as a buyer.
And that's the key, because our role as real estate agents has shifted, right? You used to be, in the good old days, you would go brokerage to brokerage and look at their little black book, and you would go to office because there was no MLS. And then, all the listings became available. So we shifted from a gatekeeper of information to someone that needs to come along and help distill it. So today we're somewhere in the middle where the informations are still readily available, but there's now the issue of not enough information. There's too much information. So they need us as a partner, as an advocate, as an advisor to come alongside and help them distill, what's going on in the market there.
Yeah, it's a fascinating conversation. And you know what? Anyone that has a lot of clients, I think back in my career when we were transacting, the biggest mistake I made was not tracking and nurturing the buyers. I mean, I must have worked with over 1,000 buyers over my 10, 15-year career, whatever it was, before I stopped doing urban digs. And I just didn't follow up with the ones that faded. I stopped nurturing them. They faded. I'm like, all right, see you later. Never to see them again. And it made me realize another thing. A collaboration system is very important. I don't care if you use Urban Digs or you use OLR or Perchwell. I don't care. As long as if you have clients and you have buyers and you have a more than 5, 6, 7, 8 buyers, it starts to get very counterproductive. And John, you mentioned A, B, C buyers. How do you figure that out? Sometimes the collaboration system will identify that for you. If you have 10 buyers and you put them on a collaboration system successfully. And by the way, when I say that, that's a job in and of itself. You got to really have that whole method and process down of like telling them what this is, why it's important, getting them to sign on to it, getting them to use it versus Street Easy, for example. But now you could see which of your 10 agents are most actively looking and what they're doing. It'll just pop out right in front of you. Right. So you'll figure out those people to identify, and then you just have to worry about nurturing all the ones that may have faded.
And I'm a big fan of using the Urban Digs, client collaboration tool, because not only do you get to be able to share the listings, but you also get to be able to share the data or the charts. So you can reaffirm why now is the right time. So not every client has a defined time frame to buy or sell. So you can use then the tools to help push or pull, as Noah and John talk about in their market updates too, to be able to earn that trust. But I think what Noah and John are hitting on, the biggest piece where agents make a mistake when they're representing buyers is they focus too much on the listings and they don't focus on the person.
Yeah.
Very interesting.
That's a great point. So let me bring it back, because we interviewed Bob Knackel, and we've done it a couple of times, and he has the man's awesome.
The nail on the head.
He hits the nail on the head repeatedly.
Classic
and what
Johnny
he likes
line.
to talk about is specialization. Identify a niche, go deep, and you become the expert in that. How much do you agree with that? Is that a critical aspect here in terms of, you think about your funnel? Is that part of the funnel, like the top of the funnel, like I am the 3-bed co-op expert for the Upper West Side or whatever it might be? Specialization.
So at a certain point in your career, yes. If you're just starting out, you don't necessarily have the luxury of specializing because you need to build the experience. So there becomes this point as you evolve. And again, this is so clearly defined in our experience journey about how you need to start and build the experience. And quite frankly, your early clients are providing you more value than you are to them. But that's a closely held secret. But as you become more successful, more skilled, and build your client, you will do better by specializing because A, you're going to be wasting less time. B, money is made in the niche, and money is made from being able to set yourself apart. So if you become the dominant person in a certain market, there's money to be made when you're concentrating your efforts, focusing on what your highest and best use is. And most importantly, you need to know every piece of inventory and have seen it in that price point, in that market that you want to focus on, because then you can speak to your buyers way more intelligently. You have the relationship. So I am a big fan of specializing because it's a way of helping to make sure that you can actually be more productive for your time. We cannot confuse activity with progress.
Great point.
Good stuff.
I'd like to open it up. I mean, if anybody's out there, they have a question for Jared, please feel free to put it, I guess, in the comment section. It'll pop up and then we can read it.
Yeah, if there's any user comments, otherwise we're kind of winding down over here. I think Jared, I mean, you went over a lot of things here, man. I mean, it just adds to how complex this job is. You're just going over one thing, funnels, right? And all the stuff that's related to that and why. And it's a long conversation. And this is why it's so hard to compete in this business. Is you got agents and teams out there that they've spent years and they've spent money on this and really getting it where it needs to be. And then you got other agents out there that are just figuring this all out for the first time. It's a complicated beast out there.
Yeah. And I put Jared, I put your email up on the screen. So if anyone wants to reach out, say, any questions or thank you, etc. It's right there. Oh, there we go. I'm going to hide my banner. There we go.
I got it all set. But nice. This has been great. If anyone has any questions and you didn't get a chance to put it in here, you can contact Jared. Jared, I mentioned before, you did this for free. You did not have to do this. I really appreciate you coming on and sharing your wisdom. It's always appreciated. John, great to have you here, man. Thanks for asking all the great questions, what you do. And Jared, let me just give you a sign off here. Jared Antin, Managing Director of Elegran Forbes Global Properties. I appreciate you, man. Thanks as always.
Thank you, guys.
Thanks, Jared.
Out there.
Cheers, everyone.
Bye.